All right, guys, we are recording and we're underway. So the whole point of this session is to talk about candlesticks and how to read them. A lot of you got questions and a good little opportunity here. So, the way I like to do things, look at the live market, best examples in the world, watch it live. So let's just go into the SPY since it's been on the move today. It's been good. So on a 30-minute, all right, this is where everything is based, just on the 30-minute chart, at least for my trading. And it's very simple, really. You can see that there's a level of resistance, right? It hit its head on that, didn't want to go, that's resistance. And then when it breaks out, it's no longer resistance. Ideally, it breaks out and comes and bounces back off it, which is confirming that what was resistance turned into support. And then you have an opportunity to take a trade, put a long on top of it and a stop right below it, and you're in this thing. That's basically how I see it. Price action. I mean, this is the easiest one, where you have a consolidation and a breakout. And again, on the 1 minute, not too much of a big deal. You can see that resistance chopped around, then it broke out. Here's that retest. You can get long here at the breakout. You can get long here at the retest. Your stop is always right below the level. What was resistance, turn into support, and off you go. And I think the nuances are a little more interesting when you're looking at executions. So let's look at this area where we have the retest. Here's the breakout, here's the retest. And the way I'm reading these candlesticks specifically and looking to take entries without any other indicators, no volume, no tape, no level 2, no nothing, is when I'm looking at when it comes down and it bounces, I want it to close one genuinely bearish candle, which you can see here, 953. This one's the genuinely bullish candle. And by bullish, I mean the close and the high are in the same place. There's barely any wick on the top side. You zoom in a bit, you can see there's a tiny little wick. It's almost nothing, right? So once this candle closes, I identified this as bullish. So breakout, bounce off, that's doing the retest, closing a very bullish candle. Then the new 1 minute high, the next candle, if the next candle makes a new high, that's your entry right there. And it's a very precise point with the stop right below it, right below the area. Give it a little bit of room below the level. And then you're in this, and your targets are basically just the next level up. So this is a very, very common trade. You guys see me do this every day at the open, just looking at breakouts, looking at retests of breakouts. And the retests, I got to say, are a lot easier to trade. Rather than getting in here and trying to time the breakout, catch the breakout when things start exploding on your screen, it just starts moving fast and busting through a level, pulling back, and you're not sure if it's going to go. You think you should add in, maybe you should get out of it. It's all that. It's difficult. So I don't necessarily recommend entering breakouts until you get a good grip on it. I recommend waiting for the retest, which happens about 70 or 80% of the time whenever you do have breakouts. So this candlestick pattern is really important. Again, you're looking at a retest of breakout. Let the breakout happen, let it come back and retest, let it print a genuinely bullish candle bouncing off of the area, not just precisely the line, the breakout area, Bullish candle, new 1 minute high is the entry, the stop below the price action. That's the best way to do it. Then you just hold on to it. What do we got? You got a question here? Yeah, Juan, go ahead.
Thank you, Avi. What was your confirmation for the breakout at 9:40, the big white candle? Because I remember you took the trade before the green line for your Fibonacci level.
Yeah, I took it up here. Entered, I think, right at the top of this candle as I'm watching it break the level. Now, what I'm doing in this case, I'm really watching the micro price action. It's like watching the tape. You're really watching everything happen in precision. And I'm watching how it's going up and how it's going down, how it's going up and down. And is it moving generally up? It's like I'm watching 10-second candles within the 1 minute candle. I'm visualizing that as I'm watching it. And so I'm doing that, but I'm saying that comes after a lot of years of experience. So until you really have confidence in being able to do something like that, which is timing the breakout, don't time it. You don't have to. You really don't have to. I mean, I got into this trade and I had to de-risk it, but if I missed it, I would have put it on here and I wouldn't be too fussed about de-risking. It probably would have been a bigger trade, probably would have been easier because over here I had to take it off. But after a retest, you expect it to continue beyond the breakout area. You could just hold on, get to that level, and then start taking it off, then add in again, and then go, rather than de-risking. So again, also you got to understand one more thing on breakouts. Breakouts are momentum trades. So breakouts go until they don't go. It's just momentum. There's momentum to break through a level, a lot of activity, a lot of buying in this case. And then when all that activity and all that action is stopped, it does a pullback and a retest. And then the real sustained move happens, which you can see is smaller. See, these candlesticks a lot smaller than these wild ones. This is sustainable. This moves. So breakouts, you got to watch the momentum of the breakout, as in to catch and time that breakout as it happens. And you got to also have a wider stop, which is tricky. And then also you got to scale out when that momentum slows down and starts stalling. That's why breakouts are tricky. Breakouts are people trade ORBs and stuff, and those are all scalps. You can rarely get into a move like this trading an ORB. I mean, rarely. If you get an ORB in this case, if you have a level here or you catch that ORB, you're in this. This first red candle, you're taking off 50%. I mean, your move is tiny. And then you might be able to hold, and you identify the momentum's gone. You're out of this thing basically 90%. And then you're not playing the bigger trade of the day. That's very normal with breakouts. So in order to be able to catch the bigger moves, generally avoid the breakouts. What I usually do nowadays is I try and enter the breakouts and I try to get even heavier and double the size at the retest. Today, I just got in too heavy at the breakout. I couldn't add at the retest because I was already in too heavy. But, that was today. It's not like that every day. Dave, yeah, go ahead.
Avi, is this session recorded?
Yeah. Yes, it is being recorded. Yep.
Okay, thanks.
I'm just going to make sure the stop isn't there. This is going to push up, and I want to make sure the target isn't right. It should be about 5. Right in this area. All right. Anyways, I'm in this position. So let's get this straight. All right. There's lots of good action to watch here. Yeah, go ahead, Sumit. Your question.
So, Avi, apart from the genuine bullish candle, do you also have some criteria about the size of the body?
Not really. No, I don't care too much. You see, I'll show you something else here. You're looking at bullish candles. I saw something earlier. Yeah, no, I don't see it right now. But no, I'm not fussed about the size of the body. Like, for example, if you look into this area, look at the size of the body here. This is a bullish candle. See that? The body is tiny. It's basically a hammer. This is a bullish candle, where the criteria for the bullish candle is that the close and the high are in the same place. There is no selling on that candle. That's the new 1 minute high. You can enter that. Look at that thing. Just ripped. I should exit this position now. That's going to get me. All right, that's it. Close that. Okay, no more trading. Done with that. So we can focus. All right, so that's how you do these breakouts, the naked candlestick patterns. They really work well. Yeah, Omar, go ahead.
Yeah, so what happens? So you enter, you get the move. What happens if it doesn't make a new high?
Don't enter.
Well, I mean, you're entering at the pullback, right? So
no. You're entering at the new 1 minute high. For this style of trading, using naked candlesticks.
Oh, I meant like later on. So let's say it's going, and it doesn't make a new high. Do you want another retest, or like if it retests again, is that like a sign that it's not gonna hold? I guess my question is like, where do you put your break even after you enter and it goes up to the previous high?
Oh, okay, up here you mean, like let's say you enter here and then it gets up to that previous high up here? Is that what you're talking about?
Yeah. And let's say it doesn't even get that high.
Yeah. So this is a good point. What you can expect, and it's very typical, is that the breakouts only go a certain distance. When you have a good retest, they tend to really go. That's when the real move starts. So when I enter at retest, I typically anticipate it's going to break the high. And then once it breaks that high, then I'll move my stop in, perhaps in this case down here. It's better than break even, and let's let it all run. That would be the ideal thing to do. So that's very typical price structure, where you have a breakout, it goes with momentum, then it pulls back. If you get a good retest, like this is a perfect example, then you anticipate that retest really is the beginning of a serious trend. It's going to break from whatever that momentum breakout stuff was. In this case, right about here, consolidate a bit maybe, then go, and it just could keep going until the day's over. Until the trend's over, whatever the next liquidity level is.
Yeah. So if it failed that, let's say makes a lower high.
Yeah, then get out of it.
You get out?
Yeah, you can hold it for your break even. Typically, I hold it down here because it could even mess around a bit and then go on later. It could do that, But if you don't want to tolerate any of that, then what you can do is, once it gets to that high of day, now you're basically looking at a high of day trade. And what you should look for at a high of day breakout is a consolidation before the breakout. So once you notice this consolidation is happening, what you can do is expect the breakout. If that breakout don't happen, if it falls through that consolidation, you can get out. You can do that too, and that's more conservative. You still make a tiny profit on that.
Mm-hmm.
That's one way.
Okay.
There's a couple of different ways to do it. I typically don't. I typically just let it run. I just leave the stop there and trail it a little bit.
Yeah, I guess that's something that I'm trying to work on, which is where am I wrong? A lot of times I get out of break even. We were talking about this earlier today, right? I get out of break even. I'm like, I'm not wrong yet. And then now I'm fighting to get an entry. And a lot of times my entry is worse than my previous entry. Like, you know what I'm saying? So that's kind of something that I'm trying to pick your brain on, is like, do you just leave it where you're wrong? I mean, that's in theory a break structure. If it goes below your green line, you're wrong, right? It breaks the structure, and that's where you should be getting out. So I'm just trying to figure out how your brain works, because if you just take the risk, you put the trade on, unless it breaks out, that's when you should move it back to break even. I don't know.
Yeah, no, I get what you're saying. What you got to think about is that green line. It's an area. It's not a precise point. Just because it breaks the line, you should get out. I don't believe in that. To get precision, look at the price action. The price action is telling you that the bottom of that wick, that's the precise area. In this case, it happens to be precisely the line. But if you look at this area, it's not really respecting the line. Or actually right now, look at this. It's not really respecting line. It's finding resistance just below it.
Mm-hmm.
So pay attention to the price action. If you're shorting it, put your stop right above the price action, not above the line. Let the price action give you the precision, where the line gives you the area. And now you can work with that. Again, with 1 minute candles, they're really tight candles. So you can really get some good precision with them. So I'm always watching. Look at this. The buyers are stepping up. You can see it on the 1 minute. These lows are getting higher and higher. So I'm always like trailing these buyers down here whenever I'm trying to add or tighten the stop and stuff like that. So that's really important. Think of it that way. Use the price action as the primary point of precision, because that's really what drives everything. Everything else is just based on price action. Even these levels are based on price action, prior price action. So think of it that way. Hope that helps.
Yeah, that helps. I guess I'll let everybody ask questions, and I'll show you an example of something that happened today, and then.
Yeah. Well, Srinivas, go ahead.
Yeah, hey Avi. The entry points at the retest, should it be the higher high compared to the previous red candle, or the high 1 minute candle?
Based on the bullish candle, not on the red candle. See, what you're thinking about here is it broke out and it retest. For a retest, firstly, you needed to bounce off that level, right? So let it bounce. And how do you know what's a bounce? I mean, in this red candle, it could come and just chop around and bounce a little bit, then it could close red. You're not looking at that. You're looking at a bullish candle, which is all white. It has to be a white candle. And the close and the high need to be pretty much in the right place, right next to each other, which is what this is. There's hardly a wick on the upside. Once this candle closes, you've identified, okay, the retest is complete. Now you're waiting for an entry to enter the retest. And the entry is the new 1 minute high. The next candle starts to make a new high. Look at this. This 1 minute, this next candle looks like it went down first. And probably 30 seconds later, it came back up. And then it made a new high. So you have to really wait there for those 30 seconds, which requires a bit of patience. Sit and wait. Then you enter and your stop is right below it, and off you go. So bullish candle. Looking for bullish move, bullish candle. Bearish move, bearish candle, right? Nothing to it.
Yeah, thank you.
Cool. Yeah. All right, Harsha, yeah, go ahead.
Yeah, real quick. When you enter, when you buy the option, do you buy it in the money or slightly out of the money? If you have like 521.2, for example, right? Would you buy 521 or 522s?
Yeah, that's something I've been experimenting with, and I think nowadays I'm gonna go more with at the money. Like today, I did. I entered here and I went with 521. I was basically at the money because it's easier to survive these pullbacks and these bigger moves. If you're out of the money, you take something like a 522 contract down here. You go, you de-risk, and it'll slam into the contract will be down here just because of this pullback, as it goes back out of the money. So that becomes very complicated. So again, depending, if you really want to scalp, you can go out of the money and get a good pop out of it. If you really de-risk that one quickly, you can't hold for a long move. My strategy is all about holding for a long move. However long you have to hold for it to get to the next level, hold it. And so going in the money helps. In this case, I'm just barely going in the money these days. I'm trying to figure out what is the right balance. I think at the money makes sense. At least today it makes sense.
Thanks, Avi.
Yeah. All right. Who is next? Sumit, is that you?
Yes. So I'm not sure if this was asked before, but let's say if after this bullish candle, it start consolidating and make a new high after a few minutes, will you still enter?
Yeah. Oh, yeah. So look at this one. Just let's say you missed the entry for whatever reason, you were distracted. It went down, right? Next, and then the third candle after that went up and made a new high. You can still enter that one. No big deal. You stop still there. It's the same entry basically. And you go. You can do that. It's not ideal, but it's okay. As long as it stops in the right place, you'll survive the pullback. And you go.
Thanks.
Cool. Piyush, I think you're next, and then Raf.
Yeah. Hey, Avi. So back to this, continuing with this same example. So you've got the last bearish candle comes to the level, the first bullish candle.
Are you cut out there for a moment, Piyush? You gotta get back to your microphone.
Okay. So just continue. Can you hear me?
Yes.
All right. So continuing with the same example, and we're doing one more what if. So you have the last bearish candle bringing you down to the level. Okay. And then you have the first bullish candle, which you've identified. What if that bullish candle were taller and extends above that last bearish candle? Would you enter right as it gets above that last bearish candle, or do you wait for one more?
So you're still looking at the bullish candle. Once the bullish candle closes, that's the setup complete. So you're not bothered about the previous bearish candle. That's none of your business. It's about the bullish candle. It's your business. And actually, I'll give you a good example on that today and why you should not be entering that. On Tesla, we saw that. Over here, we had the breakout on Tesla, came down. Here's that bullish candle, right? Not ideal. It's got a bit of a wick on the top. But let's say you identify this one as a retest.
Yep.
Then your entry is a new 1 minute high. But this one, you really shouldn't enter because your stop's down there and the target's up there. You're barely giving yourself 1-to-1. You trade like that, you'll never make money. So in this case, no. Because if that candle is too big, too far off your zone, you're basically now in the middle between two zones. What's the point? You can't do that. That's going to hurt.
But if let's say that last that last bearish candle was smaller, and then you have a larger bullish candle, and that first bullish candle exceeds the height, the top of that smaller bearish candle.
Yeah.
Would you then still wait for candle number 3?
I would, yeah. I would. And then really the relative size of this bearish candle and bullish candle is irrelevant. I don't care about that at all. All I'm interested in is that it comes back to the breakout area and it bounces off and it prints one bullish candle.
Gotcha. All right.
Okay. So don't overcomplicate it, basically.
Gotcha. Then you wait for candle number 3, and that's where you enter above your high at the bullish candle.
Exactly.
Right,
And real quick, you can see this action right here. Look at this. This is really interesting. This level here on Tesla, right?
Yes.
But it broke through the level, came back down, right? And then that basically formed high up there. Let's put a level there. This is what's giving you the precision. That's your level. That's your zone. But once it truly breaks out and comes back in, you're thinking of this as a point of precision. Then when the breakout happens, then the retest happens. This is interesting. After this retest, you're waiting for a genuinely bullish candle and enter the next high. This is not. It's got a wick on the upside. It's got a wick on the upside. This is a bearish candle. This one you might be able to identify. It's got a wick on the upside. I'm not too happy with it. But then maybe here you might take that entry if you were able to identify this. I don't think this is a good setup. But again, I want to point out how these bigger lines, these Avi levels, are areas on the chart where these are areas of interest for you. But only when the price gets there, then you get the precision of where it is. And you can see the precision is right there. Breakout, retest, and looks like it wants to go. And it's happening right now. Again, let's move this up a little. Look at this resistance. Breakout, retest happening right now. That's not a bullish candle. Let's see if it prints a bullish candle. It bounced off, but if it prints another bullish candle, if this is bullish, then the new 1 minute high, you're in, and then you're going up for the next level. And at that point, it looks like the RVR is just not good enough. So I wouldn't be bothered with it.
So if this latest candle prints bullish, then you wait for the next candle to exceed that bullish candle's high.
That's it. Yep. In this case, anyways, I'm not trading this level. It's too far off from my zone. It's almost in the middle between, so you wouldn't be bothered.
Yeah.
But,
Gotcha. So you're waiting for a confirmation entry.
Yeah, that's the confirmation. Guys, this confirmation of this new 1 minute high or 1 minute low, I got to say, once I started doing this dramatically improved my win rate. Because what's really happening is the setup is there, and then you're waiting for the market to tell you that it's beginning to move in your direction. That's the new 1 minute high. That's really what you're waiting for. It's the market's telling you, okay, the momentum is there. It's ready to begin moving in your direction beyond the setup. That's why you wait for that confirmation. And then your win rate is tremendous. Really, it's kept me out of a lot of shitty trades in the last 6 months or so. So that's an important point.
Thanks, Avi.
Sure. Yeah, Raf, go ahead.
Hey, Avi. I know noticed early on you were talking about the noisiness of the market and you weren't sure. So it was a great lesson to learn that you're not biased one way or the other. You need to see something moving in the direction or within a a support and resistance level that you've got marked. And I probably would, if you go back to the SPY chart, which I find a lot easier to trade, or at least more obvious. When you got in at that first bounce above that level, to me, that felt like a scalp anyway, because at this point, you don't know whether it's going to be as choppy as it had been, with all the stocks in the early morning, or whether it was going to retest. And you had to wait. Well, you took trades and then you scaled out. But then when it came back to test, that when you saw a few more candles after it had tested it, you were like off and running, and then that was where you would go surfing. You know what I mean? That's the time at which you could leave it comfortably. It could have continued to stay within this zone, though, could it not? I mean, let's form another scenario. Could have just not. How did you know it was trending up for the day and not chopping?
Because I know that because I'm looking at this 30-minute. 30-minute is where I get my conviction. I don't touch the 1 minute. I don't even look at it until I know what I'm looking at on the 30-minute. On a 30-minute, it's just telling me it's choppy and messy. It's in this zone.
Right.
With an 8 a.m. candle. Right. And ideally, it breaks out. Now, here's a very important point. If you see it being choppy in an area, it's going to continue to be choppy if it's in that area. I mean, look at this day. It was choppy in this area. It stayed there all day, and that's all it did.
Yeah.
That's all it ever did. Look at this day. It was choppy in this area. As soon as it got out of there, what a beautiful day.
Yeah.
It was choppy in this area. It stayed choppy until it got out of there. And now you got action. I mean, just look at these charts. This was choppy, and look at the open. The first hour and a half was choppy, and then cleaned up after it got out of where it was choppy. So let the price talk to you. If it's telling you it's a mess, it's going to be a mess. Why would you assume otherwise?
Yeah. So the 30-minute is definitely the one that you're going to be making your decision on. And then you're going to jump in the trade based on the 1 minute for the more accurate. Yeah, that was awesome, man. I just emphasizes how important it is to be able to read these candles.
Yeah, it's incredible.
Yeah, thank you.
Sure. There's many different ways to get the same information. A lot of people try to look at the tape and the level 2 and the bubble chart thing, bookmap. I mean, I get the same damn information from candles, guys. I mean, however you want to read it, you can read it. I find candles incredibly simple, much simpler than bookmap and the tape and stuff. So that's why I've gone this direction. But yeah, that's what I see. Yeah, go ahead, Asgar, and then Dave.
Can you go back to Tesla, because I have a question about the Tesla?
Yeah.
And then that level that you were explaining, and go to the 1 minute, please. So when you were talking about the levels, is it the break of the level should be 237.60 that you were referring, or is just the 237.34-ish? Because I was taking as a breakout, I'm long on the Tesla on that level, break off that level, and I was taking it from that green level.
Yeah, you're trying to go. I see. Yeah. All right, there's a few things here. That was an example, and let me show you why I wouldn't touch it up here. Wait a second. What happened? Okay, consolidation to a breakout. Okay, I know you can't trade it. So on a 30-minute, firstly, pushed up and consolidated for the breakout. So yes, you could trade this. I would take this because I only want to take a breakout after consolidation. So there, it's valid. On a 30-minute, you can anticipate a breakout. Now, what you can see here, we had this high of day, and this is a very severe high of day. This is absolute high. It just rejected and went down from there. You know that there's people selling it there. You should think about market psychology, like sellers pushing it down, buyers are not able to go beyond that. And then that really forms the high of day. That's what sets up the high of day breakout, like John Hill's trades all the time. And what you want before that break is a consolidation, which you got here, that leads to a breakout. Now, this consolidation happened to be almost precisely at the bigger picture level, and also close enough to that high of day where you can actually think of maybe pre-entering the breakout. You can enter during the consolidation if you identify it early enough for the stop below this, and you go and you're getting your breakout, and then you're getting the retest of the breakout. And
that's what we that's what I did, because I see the volume is coming, and whatever the volume was bought, somebody was buying it. So I see that it's a potential for breakouts. But I took it at that consolidation. But what I'm trying to understand is it that level that I should take, or is the high of the day level that I should take?
It's the high of the day level, because that's giving you the precision, and you don't know this until 10 past 10. You know this level at 8 a.m. You know exactly what it is. But that's just giving you a zone, an area. Call it, it looks like a straight line, but really look at it as like a shaded zone on your chart. I don't even know how to fix that. And then when the price gets there, let it tell you where the buyers and sellers are. Right here, it's telling you the sellers are right here precisely at 237.81. You should be looking for a breakout of 237.81. This is very precise. The price action is very precise. That's your breakout right there. And then retest even pushed in a little bit. Here's your retest, and it looks like it may want to go. Right? I don't like this retest activity. It's not the way I would do it. But it's messy. Does that make sense?
Yep.
Okay, cool. Yeah, Dave, go ahead. You there, Dave? You gone surfing?
Yeah, we sorry. Like I forgot my question now. I need to come back.
Yeah, oh my God, you're funny. No big deal. All right, Omar, what you got? Write it down.
All right. Yeah, let's look at Google. I know you hate Google.
Yeah,
But this is kind of the question that I asked earlier. So if we look at the 1 minute chart, it went to 149, let's say 149.50, and it broke out. And then it came back and kind of retested that area, and it printed a very bullish candle at like 10:15ish. Yeah. So that was my basis of my question. So like I entered there, and it didn't make a new high.
Yeah.
My stop was below it, and then I get this, I don't know what it is, liquidity grab or whatever it is.
Yeah.
So that's the kind of the frustrating thing of trading, which I know you get stopped out. Things don't work out every time. But, that's why I'm saying, like, put it back at break even, because if it comes back and retests it, it's probably, if it doesn't hold, it's going to break. I don't know. I don't know what to do here. Is this just the market and I just need to just take the L? Or am I misunderstanding what happened? Because tested the breakout perfectly with a very bullish candle.
Yeah, I see what you mean. So let's go through this. This is actually a very good example. Let's say you don't have any levels on your chart. You're just watching the price action like this. You identify the top here. I mean, you can identify this at the end of the 3rd minute. Here's the top. It goes down from there. So you can draw a line literally right there. You can see how it came back and rejected that, but didn't really sell off from there. Just consolidates below. Now, this consolidation is telling it's ready for a breakout. It's that ORB, which happened about 30 minutes. Call it a 30-minute ORB. Here's the breakout. You probably have a lot of volume on this candle. This is a breakout candle. You can even consider this a retest, but this is tricky stuff. Again, I don't recommend trading it. So if you scalp that, great. Now the retest over here, as you saw it happen, you got into the 1 minute high, stops there, it didn't go, you get stopped out. Okay. Next comes and it does it again. And it prints this bullish candle. Over here, the next 1 minute high is where I would get interested to enter. I might even delay entry a bit and let this next candle push above the level and take a little later entry. Stop right there, and you can still run this thing for 5 hours or whatever. It's still running. So just because you stopped out doesn't mean you shouldn't re-enter. The setup is still there. It did a retest, did a second retest, which is deeper. Sometimes people like to say that deeper retest is no good because the sellers are taking over. There's that. So I would wait a little bit on this one. But there's the other theory where it got deeper, so it's cheaper. And there's more buyers, more aggressive, more excited, ready to go. And if you have volume bars, you might be able to read stuff like that. Me, I would just wait for this retest. I would stop out just like you. And then maybe wait for this one a little longer, maybe enter the middle of this candle and be able to put the stop perhaps either below the candle there, and then move it in tighter a little bit to right below the level and let it run. Let it break through here. I wouldn't take partials here, but break through it, because the retest, once a retest happens, you can see it runs further than the breakout. Breakout is just a bit of momentum. The retest is the beginning of the trend, and off you go. So think of
Yeah, so I feel like this has got me in a hole. It's like the opposite of what I shouldn't do. I feel like this has got me in a hole where it's making lower highs and lower lows, and then you just keep taking the lower low, and you're kind of going against the trend, even though, yeah.
Well, you know what? Here's an interesting example. Look at this candle. See, it came down. Look, this is a bullish candle, a retest complete, right? And the new high is actually here. This could be your entry right here. This would be perfectly appropriate. So it came down, bounced off the area, went deeper, and then the new 1 minute high, you can enter right there. You can have it stop below the action or even further out, a little wider, and then hold it for a couple hours. So that would make sense too.
So on the second one, the one that your mouse is right over right now.
Yeah.
If it doesn't make a new high after that,
Wait for it. Wait for the new high. It's still in the same area, as long as it doesn't like really get into a downtrend or something. It hasn't done that. And you have that idea that it got deeper and therefore the buyers could be more excited. And if you have volume bars, perhaps here you probably see extra volume come in. It got deeper than the previous low and sure enough pushed up. Big buyers come in. If you're watching the tape, you might see this. If you're watching Bookmap, you see big bubbles over here happening. You can use all those confirmations. I don't care about them because I get what I need to see just from here. I'll just wait for it to make a new high and I'll put the stop below it and go.
yeah, there was a volume candle, but it was the red one. It wasn't the.
Forget the red one. Yeah, that's the thing about volume. You see, you get these mixed signals, and it just I don't like it. It's messy. It's
I was part of the volume on that candle.
you get big size. You got 100,000 shares.
Yeah, yeah, cool. Yeah, that's good information.
Alrighty, cool. Dave, you remember your question?
Yeah. So, I mean, you wait for that candle to close, right? Like, so then you take the entry, right?
Yes, close and then the next high on the next candle. Not even the next candle. The next high might happen 5 minutes later, like in this case. And the reason I'm doing this is because I'm not looking at any other indicator. You might get tighter entries or earlier entries if you're reading the volume and the tape and a combination with the level 2 and BPOC and all that stuff. But you know what I like to say, 80-20, man, that's just too much work and too much confusion. So I don't bother. So just simple candlesticks, new high, there's your confirmation and off you go. And again, that's important to have confirmation. It's improved my win rate a lot just by waiting for confirmation, waiting a minute, waiting a few minutes, because you're waiting for the market to tell you that after the setup is complete, it's actually ready to move in your direction. That's what the confirmation is telling you. That's what the new high is telling you, or the new low. That's very important.
In this one, let's say we're taking the example of Google and this. So after this bearish candle, like, okay, so this 1 minute candle almost like pierced it. And the next candle, like, which came in, it's like it got rejected from next one. Yes, this one.
Yep.
And still, like, okay, it is almost like piercing the previous one. So will you wait for like this candle to close, or like, okay, you enter like, okay, it make the like new high, although it got rejected, like, so still you will enter that trade?
Look at this. Let's zoom in a bit. What's really very interesting is if you look at this one, this to my eyes is the real retest complete. The setup is complete when this candle closes bullish. And then it failed to make a new high. It was all bearish, right? And this bearish activity, okay, it happened. So you would not enter just when this closed bullish because you'd wait for the new high. Now, this bearish candle happened. Let's say this bearish candle continued and it would have been a downtrend. You would never have entered it, right? Because you didn't get the confirmation, the new 1 minute high, you wouldn't have entered. And no problem. You saved yourself from getting chopped up and stopped out because you didn't enter because you were waiting for that new high. It didn't give you that, so you didn't enter. That's great. Now, instead, what did happen is it went down super bearish. You're thinking, all right, the sellers are taking over. These highs are even getting lower. But then you get this bullish activity, and then the new high from that bullish candle, the new high is approximately here. You'd think it here, the highs are getting lower, but it's making a new high. This whole thing is negated now. It's bounced off, new high, off you go. So think of it that way. Again, very, very simple. Don't overcomplicate it. You're thinking about volume, big bearish candle, all that, forget about it. Unless it truly departs the area. Like from here, it goes down here someplace, even breaks the low of day, and then it comes back, and then you're messing around with it. Now it's too much trouble. So think of it this way. And what I would really suggest when you're looking at breakouts, here's the one thing. We identified that on the price action. Let's identify this as the bottom of the opening area. When you have a breakout and the retest should be in the upper half of the range. So here is about as low as you can allow it to come. And realistically, it gets down there. I'm not likely to take a breakout from there. It's dangerous. These retests are approximately in the area of the breakout, which is here. But Wyckoff tells you it can go in as far as halfway into the range and then go. So that's fine. As long as it doesn't really get into the range and get stuck again, you don't touch it. But this was actually quite simple. It was just in the area. It didn't go all the way down. So when you're trading breakouts and retests, make sure you first identify the consolidation before the breakout. So there's a few steps to it, right? consolidation, then the breakout, then the retest. And then entering at the retest is the best because you already have all that stuff in place, all that structures in place. You have the consolidation and the breakout, and you're just waiting for the retest. I mean, you're getting so much confirmation, and then the new 1 minute high. I mean, how could you go wrong? You know, of course, you can always stop out, but you know, it's a high conviction kind of setup. So think of it that way. I think you'll be okay. That makes sense? Piyush, you there? You got a question?
Yeah, right here. Sorry, not to beat a dead horse, but so continuing with this example, you actually have two entries. You have the early entry, which is above the white bullish candle right after the large red bearish candle. Nope, next one. Yeah.
Yeah, okay. Yeah.
Or you have the second entry, which is above the, yes, right there at that level.
Yeah.
Am I right?
That's right, yeah. And it's the second one that makes sense to me. Because if
Okay.
I'm watching this in real time, I imagine that I would identify this as the breakout, as the retest complete. So I'm basing it on this one. So my entry would be in this area with a stop, probably down there. And off it
So
goes.
I look at this maybe similar, but a little differently, because the second red candle, the large bearish candle, broke the low of that turnaround just prior. And then the next bullish candle is the one right after that. So that little microstructure almost forms an ABCD. So you could enter an early entry, call it a cheat entry right there, right above that, or you can take the further confirmed entry above the pivot,
Yes,
which was
yeah.
formed.
There's two ways to do it, and you can do both. You can scale in that way.
Half and half.
Yeah, get in bigger and bigger and go. And I do that quite often too. So it's interesting. You have structures, and then you have structures within structures as well, and that's fractal patterns basically. So
Right.
the market's a gold mine. There's a million opportunities. So what if you missed it over here, or you missed the breakout, or you missed this 10 minutes later, or you even missed this entry? Well, you have another one 3 minutes later. You know, so it's just FOMO has no place.
Yeah, I have to get over that scarcity mindset.
Yeah, all of us. We come from the rat race, from the traditional education system that screwed us all up. We're all scarcity. We're indoctrinated with scarcity. What a lump of crap. So we gotta
Thank you.
just break that, and then everything works. Cool. And hell yeah, you got a question here?
Yes, Avi. I was you probably just answered my question, but at the same example here, the first white candle above that level and the entry, the higher high. No, the one prior to that.
Okay. Yeah.
No, the other one, the one that it is the first retest right there.
Yeah.
So you would say you would enter there, and then you would probably put your stop right below that bullish candle, right?
Yep.
So that like trade fails because of you getting stopped out. So you're saying you're making another attempt later if it gives you another opportunity.
Yeah. And here's the thing: don't think of it as a failed trade just because it stopped out. It's a successful trade because you didn't blow your account up. That's important.
Definitely.
You stuck to your trade book, and you understand what is a part of your trade book is taking profits and taking losses. That's why you have a stop loss defined in your trade book. So just because you stop doesn't make it a failed trade. It makes it a good execution. And you lift the trade another trade, which is 10 minutes later you get another one.
Yeah. And I had this other question is like where we're talking about consolidation on the 30-minute before you make a decision for a breakout, and then again you have to match it with a consolidation on the 1 minute. How many candles would you say the consolidation for you on the 1 minute?
That's a good question. On the 1 minute, I mean, look at this one. You have what, 10 minutes here? This is pretty obvious one, pretty clear, clean. Let's look at a few examples. I don't have a specific number of candles, but even here, you can see this is about 3 candles or so for a good consolidation, and it goes. So think of the structure of an ABCD. How many candles in an ABCD? You know, you can't really say. If it's 2, it's kind of small. Really. Right, but look at this one here. This is a little consolidation. Just 2 candles. Okay, it goes. So you kind of got to look at the structure. I don't have a specific thing about it. And what is a consolidation? How many candles defines a consolidation? Over here, it's 2 candles. Over here, it looks like it's 30 candles until it really wants to go. So you have all kinds of things. So just think of the ABCD. I mean, look at the ABCD webinars and look at that in Andrew's book, what ABCD patterns really look like. And you'll get a picture of it. Yeah, obviously one candle is not a consolidation. That becomes a 3-bar play, which is more tricky.
So more than one candle. So pretty much it's like 2 and more.
Yeah.
On SPY right now, the way it is structured and that came to the level precisely on a 30-minute, there's no consolidation. Would you say this will be a reversal?
Yeah. So up here, I would definitely not look for a breakout. If it just goes through the level, there's nothing to trade. Like, look at this example. For example, if this was a level, I wouldn't enter a short here because on a 30-minute, I don't see a reverse ABC.
Yes.
But here, look at this one. This is actually a perfect one. It gets there and it puts in that big reverse hammer, the new low, which is basically below that. Get the entry. I'd be ready for this one. And I don't know where the levels are. This was yesterday. But that's a really good one. That is really good. Here, this one's pretty good too. Now here, there's no consolidation. It just got to the level and it's reversing. Now, just because it's reversing doesn't mean it's short. I don't have a reversal pattern here.
Okay, so that's not.
Just let it go. There's nothing to
That's
trade.
not the strategy. Yeah. So just let go. There's no consolidations, which you're saying.
Yeah, exactly.
Thank you, Avi.
Sure. Now look at this. How precise, man. I entered here. If I just held on till here, what the hell? Imagine full size just let it run. Like $500,000.
I did.
Can't even think
I
about
entered
it.
at the pullback and held all the way to the.
You did.
Yeah.
Oh man, you got to give us a screenshot of that. I want to see this.
It was a small size, but I did have up to that.
That's great. You're building the right habits, as in holding for your targets and all that. And once you get bigger in size, holding to targets it gets difficult because you got to get used to handling that size. That's why you can't just size up, double your size one day. You got to gradually do it. It's an emotional thing. So, all right, Kismet, yeah, go ahead. Good question. No, yes, no, not in the room. No.
Hi. Sorry, I was on mute. Yeah, can you go back to the Google chart, please? I have a question right there.
Mhm.
Yeah, when it's broke out and it made a new high first, and then the next retest, it couldn't make a new high, right?
It did
You
right
see
here.
it? Yeah.
This is the
No,
retest.
no, like
Here.
the high of the day. Like for example, yeah, it couldn't break for the next retest. You see the retest? Yeah,
Retest.
yeah. And then if you go up, yeah, it couldn't break it, right?
Yeah.
So in there, I would probably think of going short.
Short. Okay.
Yeah. So that's why I wanted to tell me why I'm wrong here.
Okay. I wouldn't consider this a short for a few reasons, but look at it very simply.
The market is obviously today is trending. That's a different reason. But
it's not-
if it wasn't trending,
It's not about that. All right, just on this structure here, we put these lines on based on the opening range. All right, get a breakout, a failed breakout, you might think about a short. The reason I don't like it is, like we discussed earlier, see how it behaved in here? Super choppy and messy. It's got screwed. So if we get into this, what do you think it's going to do in here? What it did before?
maybe it could go up to the 148 area to get some buyer.
It might want to go, I don't know, but I don't want to manage a trade that looks like this. The candles look like this, is going to mess with you. There's no point. And realistically, it's easier to trade a price action that has just recently broken out of a choppy zone. Like this. This is perfect. Look, it broke out of a choppy zone, little momentum, retest, and look how clean this is compared to this. This is like two different charts almost. See that before 10 a.m. it was a mess. After that, it's not too bad.
Sometimes I got caught off these things because I feel like, okay, if it couldn't break the high, maybe I can go for short. And I do take those trades sometimes, yeah.
Careful with those. Those are what do you call
it? Big candle is showing me the sellers, more sellers in there.
There is a strategy for that. It's called false patterns or failed patterns. Yeah, failed patterns. So you just reverse it the other way. Careful with that. There's a good reason I don't trade that way anymore. I used to in like 2023. I used to take those failed trades, basically get chopped up. So you go long, get stopped out. You go reverse your position, you get stopped out again. Now you don't know what to do. That's the danger of it. Please don't do it. Unless you're really precise about reading the tape and in incredible detail, I don't recommend doing that. I mean, you don't need to. There's easier ways to make money, right? Why do you want to mess around with this? Just
well, that.
Let it go. There's easier ways to make money. I promise you. A lot easier. I mean, look at this. This is just a retest, stop out once, maybe twice. Not big deal. What's the big deal?
Yeah, because because I trade those setups. That's why it looks very different to me. You know what I mean? Because it couldn't break the higher of the day, and then there's a red big bearish candle. I would maybe enter in there. That's how I
Yeah.
enter.
Yeah, I understand. I understand what you're talking about. You got to find a way to stop interacting with the market. You don't
How?
have
So
to.
just ignore this the strategy that I'm working or was doing, or
Yeah, this failed pattern is a very tricky setup. Jared, I think he takes it quite often. Please be careful with it. It's he's looking at a million other things. He's looking at the options markets in a lot more detail and stuff like that. So unless you have that detail, don't do it. So I don't recommend it. Again, I think you need to trade less and you'll make more money. Just stay and wait for your patterns and just wait 30 minutes until you get a trade. And if it doesn't happen, come back tomorrow. No big deal. You don't have to trade every day. Just because you showed up doesn't mean you have to trade, right? So think of it that way. You gotta find ways to stay out. And don't just go flipping positions up and down. That's gonna be messy. So,
thank
cool.
you.
Sure. Who we got? SK? Is that you? Any question? Sure, is it?
Hey, can you hear me?
Yes. Yeah. Go ahead.
Yes. I don't have a question. I just wanted to make a comment, and I've been listening to the wonderful explanation that you have been giving to all the other members. I wanted to just add something about some analysis I've been doing for the last 6 months, and I was first of all, I wasn't sure if it could be that accurate based on what I found out. What if there is a way to figure out in the very first 5 minutes what the trend would be for the rest of the day? That is what I was trying to solve. And I have kind of figured out a way, and based on my probability analysis, it has a more than a 90% probability of it happening. And I can explain how is it that I'm trying to accomplish this. I'm not sure if it's possible to do that in DAS. I use Thinkorswim. And what's happening is I'm color coding the levels. So the 8 a.m. levels based on the observation I made with the trading. I'm very new to this group. So I actually observed you in one of the YouTube videos a couple of months ago. And now I'm here. So color coding those lines shows me the lines above the 8 a.m. in green, right? So if the open of any ticker is above the first or the second green level, it's more than a 90% probability that the pattern or the trend for the day is going to be green. And I'm not sure if this is going to help, or if you would want me to post a lot of those screenshots from my last 6 months of gathering all of this data so that someone can look at it and just help make it useful.
Yeah, that's an interesting observation. It could be it. The thing is, if you trust it, then you got to trade it. You've done the back testing. Now trade it live, or at least paper trade it, and see your results at the end of one quarter, or at least 100 trades or something significant, and see if it actually is true. So you establish your bias based on the location of the chart. Then you got to find ways to enter that position, enter that trend. So
yeah. So far, I have 2 months of following this.
Okay, but have you been able to execute it and make money out of it?
Yes,
and it's not just backtesting, but trading it in the real market and having 1 quarter of profitability. I think that's really the qualifier. It's interesting.
Yeah, I'm going to wait another month or so. The only 1 or 2 exceptions exist when before open, anytime a ticker runs up and there's a big red candle. If it gaps up right before open, that is the only exception so far that I can find in my analysis. And that way the pattern might not be correct, even though the stock opens at that position that indicates a green trend for the day.
I see what you mean. Well, that's interesting. Well, let us know in a month how it's going and share those statistics, and then we can do another session and you can share that with us. I think that'd be great.
Yes. Yeah, the only reason I mention is I hear a lot of questions where people are what they're actually asking about is about a lot of noise. So since I've been following this, I have not even opened up a 1 minute chart ever to enter into a trade.
Okay, great. No, that's great. You're able to eliminate noise and get your directional bias already sorted out.
Yes, yeah, that's why I wanted to just mention this. And yeah, I'm going to do some more testing and then I can share the data and statistics and how to approach this. What I'm also doing is going to the historical, let's say back September 24, August 2024, and replaying those days with some common tickers like NVIDIA, AMD, and then trying to figure out what's the accuracy of this bias.
Cool, that's great. So yeah, let me know when you're ready. Share it with us. Maybe we'll do another live session here and you can share the details and what it's all about.
Yeah, okay, sure. Thanks, man. That's all.
Cool, thanks, SK. Yeah, Dave, go ahead.
Yeah, I'd like to discuss my Amazon trade with you. I just took it, and although it was a very bad entry, I want to understand, like, from you, like, okay, how I can stop myself from that.
Okay.
I tried to short Amazon a few times today, and I entered at 10:51.
Using these Avi levels? Oh, okay, I just put it on. Anyways.
Actually, it was like the register, not the exactly the Fibonacci level, but previous resistance was there, like 172.
Okay.
Around that. So it came from there, like, so it gave a small bearish candle on the 1 minute. First, it was like indecision doji, then like, okay, small, small candle, and then the engulfing 1 minute candle. So I entered here, but then like, okay, it keep on going back from like so.
All right, so let's look at this. Let me get rid of these lines. I don't need them here. They're just in the way. So if you're identifying up here about 172 was resistance.
Yeah.
So put a line there. That was the high of day, a very significant, obvious one. It had a high of day here, consolidation, breakout, made a new high. You only know it's a high after it truly, rejects from there and goes. Then it consolidates. Look at that. That's pretty cool. And does a break of the high of day, and then the retest, and then off it goes. So realistically, if you have identified this high of day, you can either catch the breakout if you're good at catching breakouts, or wait for the retest. And look at this. This is a near perfect retest. Right here. Comes down, prints a bullish candle, new 1 minute high is the entry, stop right below, and you're in this thing. It never even tests your break-even price.
My problem is shorting that thing, like, so I don't know, like, how to stop myself from doing that stupidity again and again. Like, so I saw, like, okay, it got like rejected from there, and I saw like the hammer is there. I said like might be like, okay, it got like engulfed. Like, still like, okay, after that time, I enter here like 10:40. Sorry, okay, it goes 10:49.
Yeah, I see it.
This one, yeah, 10:49.
You entered short up here.
Yeah, I enter, yeah, after this, like, yeah, somewhere here.
What's the strategy? What's the setup?
It was just like, okay, I was thinking it might, because it was the previous level there, like, so previous low, the support becomes resistance. That was the idea on that.
You still don't have specific candlestick setups. You don't have a double top. You don't have a massive long tail hammer. You have nothing here to tell you it's short. In this area, the only thing it's telling you is that it broke from high of day, and if it retests, you have an opportunity. That's the only thing it's telling you. There's nothing here. You need a really good double top. Like even here, you get a double top, but this is not a good one. I wouldn't even short it here because the second top is higher than the first top. There's no way I'd get involved in this. Even here, though, this might be a good retest. See the breakout happen, retest, and doing another retest. You could have entered here, and you're getting some of this. Might even retest again. I don't know. But see, you need a specific, for reversals, you really got to be specific. Reversals, I think, are some of the hardest trades to catch. You always take a lot of stop outs, even with good setups. And then even if you get one to run, they're very choppy. It's not like this. This one was clean. But I mean, this is not even a reversal. This looks more like a pullback. But reversals are tricky. So, for many reasons. So I recommend avoid them. Don't bother. Why are you going against the trend? Just go with the trend. Wait for breakouts. And look at this. This breakout happened, an hour and 15 minutes after the open. Look at these opportunities. They're massive. You can catch it from here. You get this breakout, retest. You have here another break of high of day. And then again here, break of high of day, retest. I mean, all this, it happens all day long. Just go with the trend rather than trying to catch reversals. They're just way too complicated, especially if you've already been doing them without any strategy, without any structure. You're just thinking, oh, it's weak, let's go. That's not going to work. That's not going to work. The only time I do reversals is with massive 30-minute candlestick patterns, which I haven't seen in a long time, really. And maybe in a month, I haven't had a reversal trade. So avoid it. Just avoid it. Don't bother with reversals. Just go with the trend. I think you'll be better off. Make it easier on yourself. There's easier ways to make money.
Got it. Thanks.
Yeah. Cool. All right. Let's look at candlestick patterns. I don't see any questions here for now.
Hey, Avi.
Yeah, go ahead.
Are your levels on Amazon matched with the 8 a.m. candle, or you don't have any?
I don't have it. I just put this on right now just to see this high break right here. This is
okay. Yeah, because there was an easy trade on Amazon with entry around 10 o'clock. And yeah, just before 10 o'clock. And then holding up to all the way 173.
Okay, let's look at it.
If you open it in 1 minute.
Yeah. Even here on the 30 minute, you see the structure is consolidating and then the breakout and it just runs for the next level. The structure is all there. So on the 30 minute, yeah, you can see here's the breakout, the retest many times, retesting, and then it ran. Yeah. So around 10 o'clock, right? Yep. I would enter before 10. I'd probably enter, let's see, if the breakout happens, got really messy. Here's the first bullish candle from this one, 949. Then the real high happens here, which happens again after another genuine bullish candle. So up in this area, around 958, 959 would be my entry with a stop down here. As it runs, I'll try and tighten up the stop, maybe bring it up here, and then let it run.
Yeah.
So yeah, there's a good one. There's a good
one.
It
was a good trade.
Nice. Yeah, good catch. See, there's easier ways to make money in the market, guys, than going in reversals or flipping positions or false patterns. I mean, all that stuff is just difficult. Holy crap, what just happened? Something moved. Whoa. This looks like news.
I was just going to say, was there some news or something? Because everything popped.
Yeah. Look at that. Oh, can you believe I entered here? If I was still holding that, it's just a $1 million trade. So today I left about $500,000 on the table.
So if you were still holding that, would that whole time expiry thing be coming in or no?
Probably. There's no real way to hold it. See, here it is. I entered. Is this today? Yeah, this is today. So I entered here. This was my initial entry, and look at that. It would have lost a lot of its value as it was just doing this pullback. More than half of its value, and now it just pop and go. So that's the thing about time decay. I mean, this entry was at 9:40ish. Now what's the time? Around noon. It's a long time to be in an options zero position, unless it's truly just straight in one direction. Otherwise, it's very hard to hold on. You're gonna destroy the position. Be careful with this. Yeah, Gaten, go ahead.
Yeah, now that you're talking about time decay and options and that sort of thing, what's the next step then? Futures on the SPY?
I don't like futures that much. I was considering it. I've looked at it. My biggest issue was liquidity, but this week, so far, it's only yesterday and today, I don't have any liquidity problems. I can get in and out of the SPY with as many contracts as I want. Not a problem. I struggle with that with even something like Google. You take 500 contracts and struggle to get out of it. But here you saw it was no issue. Getting in, getting out, the fills were precise, no big deal. So I don't have a good reason to move away from SPY options. I do have a good reason to move away from Tesla and NVIDIA. It's basically liquidity.
Yeah.
The SPY, and then SPY gives you 0 DTE, which is tremendous. Just talking about options. See, this was 521. Let's say I went out of the money. I went something like 522. Let's go further up. 523. That's where I identified resistance. So let's see, 523 calls. Well, let's identify this first. So this one went from $2.50. At my target, it was $5. So that's 100% return. If it was the 523, let's see, the entry would have been what here? What time? 9:40. About $1.70. You're out at $3.50. What is that? That's more than 100% return. approximately. So yeah, 0 DT, get a few. But then to survive this, you can see you entering here. Look how much it tests your break even or just loses value while it's trending up. But this thing's not trending up as much. It's just slow. If it's truly an aggressive move, then these things really go fast. But out of the money, that's when you want to time your entry right as the move is happening and you want it to really run to your target quickly. Then out of the money makes sense. But for something like this, where you have to hold it, right? I don't know how long I held it, 1 hour maybe, hour and a half. And you got to be in the money. Otherwise, you struggle with this. I mean, you could do
So
it.
next step would be only spy, probably.
Or you need the insider information.
Oh yeah, there's that. Apparently, we're moving the market these days, huh? Fuck, man, you guys. This is pretty wild. So you see, this is a good example right here, though. When you have action and then suddenly the whole complexion changes, this is what I call the patterns are broken. You can't trade this stuff. You can't trade it based on, okay, consolidated, it pulled back, and here's a breakout. No, man, this is just news. Patterns are broken. Unless you really have a strategy to trade catalysts like this. I do sometimes. I do have a strategy for this, but this is something else. It's not based on structure of price action that we always show, like breakout, retest, here's the target, and therefore it's weaker. No, it's none of that. So don't trade this. Well, here's another example. You would think it's gone up. You might think it's a double top, and you catch a reversal, you end up stopped out. It's not a double top because the second top's higher than the first. You don't even have a good arch in the middle, hardly any space. There is room to the left, but this is not a good double top at all. I wouldn't even look at it as a double top. I'd say this is ready to break out at some point. It's happening now, but this is happening based on news. So there you go. Another example. Don't short this stuff. Don't catch reversals. Your reversals are hard stuff, tough stuff. You gotta be very, very precise. I only look at 30 minutes before I even take a reversal. Like it has to have a big double bottom or something like that, and then I'll think about it. So be careful with it. Yes, yeah, go ahead.
Hi, Avi. Sorry, a question regarding the management of how you look at DAS. Now with this 30-minute and 1 minute screens that you're looking at one time we look at your screen now, you flip between 1 and 30, right? I want to understand, what do you look at the rest of your screen? Are they on 30 or on 1 or mix? How
They're on 30 minutes. They're just on 30 minutes, and when they get to a level, then I'll just hit the button here, put on 1 minute. Some of them are on 1 minute. Only when it gets to a level, I'm interested to look at it on 1 minute. But mostly, you see, I just bring it into this screen right here, which you guys can see. So mostly, they're just on 30-minute charts. That's all I got. Okay. And I just have this button here. You can just click these buttons. I don't want to keep too many wide open screens. It's just unnecessary.
So only when it hits the level of your chart, you switch to 1 minute and you keep closer. Otherwise, they are all in 30.
That's right. Yep. Exactly.
Right. Thank you.
Yep. Cool. All right. What else is on your mind, guys? I'll try and find you some examples. What would be good is, actually, let's look at Tesla, because that's been very active lately. I'll get rid of all these lines.
Tesla level to level works.
Oh yeah, I tell you, man, these levels work. I don't know what you guys are doing not trading them. Here you go. Look at this, guys. Consolidation, breakout. Fantastic. Right there. Look at this day. You put the 8 a.m. level right there. Boom. You get a breakout in 1 minute. You get a retest. And you're in this massive day. What else you get? You have a top here. You have a top here. I wouldn't take this short based on a double top. No way. Because this top is higher than the first one. So no, don't want to look at that. So it's bullish and then it turns around, but there's no way to short it. And it goes down, you might catch a reverse ABCD. I don't see a big structure pattern here. This would be very difficult to trade. You might trade the breakdown here. Very difficult. I wouldn't trust it. What else we got? Gap down. And when you have these, you have the 8 a.m. range again. This thing got super choppy. So not worth trading. Let's see, what else do we have here? Yeah, went down, big bottom, reverse up. Yeah, very difficult to trade this. But you can see the top of the 8 a.m. candles here, and it got messy, but then the breakout happened later after 10:30. straight there. So you can catch that breakout. On a 1 minute, you probably have a few retest candles as well to enter that. So you can see there's setups all day long on these 30-minute time frames. What do we have here? This is all just choppy, messy. You can catch the 8 a.m. breakout here, perhaps. So you have it here at the top. You get in here, you might get stopped out in the next 2 or 3 attempts in this massive move. You see? So consolidations to a breakout. That's when it's fun. So we have a lot of fun. Yeah, Dean, go ahead.
Yeah, I was just looking at Apple. We're kind of it broke through one of our levels, came back down, and now it seems to be climbing back up. Now, if you were to get in on this, would you get in on this, or would you wait till it breaks a new high?
So to begin with, what I see is it consolidated, made a move. This looks like a consolidation ready for the next breakout. So I'd be interested. I'd look into the 1 minute now up in this area. So this high is where you would expect to break, but I don't see a setup to enter, when these big candles happened. And now this is very tricky. These candles are just too big, and you can tell the patterns are broken. The whole complexion of the market has changed. This is too risky. It could easily just drop fast, I don't know. So I'd be careful. Just because of this news or whatever just happened in the last 10 minutes. It's messing with the markets. There's too much risk here. Otherwise, yeah, if there was some sort of consolidation for the break of high of day here, that could be something.
Okay, but not after that big jump. Okay.
Yeah. This is, everything's broken now. You gotta wait. Unless you know how to trade this catalyst stuff, I'll stay away from it. I'd be very careful. Let's see what else we have here. Oh, yeah, this is the best example today. I'm telling you, this is what keeps me from blowing up accounts. This is what keeps me away from shitty trades every day. Look at AMD today. It's been choppy within the 8 a.m. range, and sure enough, it's choppy within the 8 a.m. range. You don't touch it. I haven't touched it at all. Not at all. So wherever it is choppy, it's going to keep being choppy. If you want to play with that, you don't need to. You just don't need to. There's much easier ways to make money. Wait for it to break out. Maybe it'll break out now. Let's see. There it is, a consolidation, getting ready for a breakout. That's the high of day break right there. 86.63 it looks like. Yeah. If it consolidates, you get the breakout, you get the retest. That could happen. It could still happen today and get a massive move. But to play with AMD in here, look at this. What a disaster. Oh my God. Just don't, just don't. Candlesticks are telling you everything, telling you don't touch me right here. It's telling you just don't touch me. Told you that in the pre-market. It's telling you the same thing. It's confirming it to you while the market's open. This hammer is interesting. I like it. So it's a false breakout with a good hammer. It might be a good breakout on the other side, but wait for that. Wait for it to really go. You might get something later today.
Actually, I have a question for that. For that AMD, let's just forget the past of it. I know it's very not clean, but if you want to take that, are you waiting for that breakout at the 86.50, or you're waiting for that giant candle? Yes, there, the 86-ish. Is it that? You're taking it from there or from the breakout of that wick?
The breakout of the wick is what I'm really interested in, because that's where the sellers are. This green line is just telling me it's approximately in this area I should be interested. And sure enough, when it got there, the sellers were approximately in this area. But exactly where? You can look at the 1 minute and you can see it. They're right there, right top of this candle. This is the big seller. And look how far down they pushed it from there. They really took control of it. 86.63. So when the breakout happens, this looks like a good consolidation. It could lead to a breakout. And the breakout happens, it comes down and retest again. This area is all, it could easily retest, then off you go. So the precision is there. The price action is giving you the precision. The big Fibonacci levels are just kind of telling you where you should start paying attention. If you were long, you'd start paying attention in this area for that to get out of it. Or if you're interested in shorting it, that's where you start paying attention to short it. And you put your stop above the price action. In this case, you're interested for a breakout, so you watch it break out. If it breaks out, you got something. And it's really the precise price action that tells you where to look. And look at this. Even though you're getting out a little away from your level, but it's nothing. Look at that. You can hardly tell the difference. It's hardly, you have so much room to run. It's ridiculous. Once this thing goes, it's gone. It's really gone. It's going to be a big trade if it happens. Let's see. Keep an eye on this for the next hour or so. You might find something. Well, Tesla's running up. Nvidia's a mess. Should have held on to the SPY. Oh my God. He's I always underestimate the move. It's ridiculous. There it goes. Here we go. AMD attempting a breakout. It did make a new high. This looks like a decent breakout. Made just a new high, just by a penny or something. Still holding above that level, but it doesn't have momentum. Another new high. Oh, there it is. There it is. There. Enter there. Go. Boom. You catch a breakout. If you like catching breakouts, that's the entry. Then wait later for the retest. There you go. And you can get into a big move. Again, breakouts, remember, they're momentum trades, right? So get momentum, it'll pop, and then it'll pull back. And the retest is when you can really hold on to it. After the retest is when you have more confidence to hold on to your risk. So there you go. Let's look at the SPY. There's so much going on here. This is a good ABCD pattern. We were talking about this earlier. One level to the next, consolidation, not making a new low, not aggressively making a downtrend, just a consolidation. So you're not looking at a reversal. If it was a reversal, the sellers by now would have shown you their hand. They would have pushed down, it would have made a double top, and would have gone. But this is looking, the lows are getting higher, getting a bit of a flat top, a bit of a wedge, ascending wedge. Get the break of the high over there. Looks interesting. I won't trade it, of course, because it's far from the level. It's like in between levels over here. But this looks good. This looks good to go. See, this is an ABCD pattern. This is what it should look like. Here we go. Let's see if it breaks. A lot of people try to enter during the ABCD. I stopped doing that. I sometimes today I entered at the breakout. A lot of times I'll add or even enter at the retest. Those are more precise, or not more legal, high conviction entries. Those work better. So all that activity that happened looks like it's stabilizing and there's a pattern forming. So now it might be interesting. If you guys like such things, the target is the 530 area on my chart. Look at Apple, looks like it did that whole thing. But yeah, big mess. Again, an ABCD pattern, this is what it should look like. What else do we have? Oh, NVIDIA going.
All right, Avi, how you doing?
Hey, what's up?
Can you go back to the previous? Show me where do you think? Where is the A word? If you don't mind, just show it to me.
I can hardly hear you. Your voice is breaking up. Connect your microphone or something.
I was wondering if you wouldn't mind showing to me where the A, the B, the C, and the D are.
Oh, on the SPY? Yeah.
Yeah, thank you.
So the A is down here, the bottom of this candle, the beginning of the move. The B is the top of the move. So right up there. The C is where it finds support. So that's C right there, about 527. And the D is when the breakout happens. So basically, it should be the same level as the B, looking for the breakout. So
Okay,
that's
good.
the ABCD pattern. Yeah. Trade this every day, man. Every day. It's good stuff. Basically had one here as well. And yeah, so a mini one right here. So look at NVIDIA now, guys. That thing's just wants to go. AMD also looks like that breakout's happening and wants to go. There's opportunities all day. Holy shit. That's the hard part. You trade and then you get done, and there's so many opportunities. So I'm telling you guys, there's no need for FOMO. There's no need to jump in early beyond or before your setups show themselves. Because look at this. It's like you just sit here all day and then take 20 trades, and they're all good ones. They're all good. And good doesn't mean profitable. Good means good setup, and then good execution. That's good. And then you'll be fine. You just keep doing that. You'll lose some, you'll win some. Your winners will be bigger than your losers, and you'll be okay. That's what matters. All right, cool. Who got questions? Who wants to talk about what? Anything else you want to cover about candlesticks or anything else?
AMD, sorry, Avi, can you go to AMD? I have a question about the retest and the setup.
Yeah.
You see that there was a breakout at 1110-ish at that level, around 1110, and then we have around 1210 that broke that level. So when you want to consider the breakout, when it broke at that 1110 or 1112, whatever it was at that time, do you consider that as a retest? Sorry, the 1210. Sorry, the 1210. So 1210.
Yes, you got me all confused. All right.
Yeah.
Yeah, this is tough now. See the price action. The buyers are pushing up, but clearly they're sellers. Look at these wicks up here. The selling is just way too powerful up here. This is not even a retest. A good retest, is when the breakout is good. So the breakout has momentum and it runs a little. Then it comes back. So there's a bit of a gap between the breakout and the retest. Those are the best ones. This one is dangerous. You can see as soon as it pushed up here, these sellers are sitting up. They're sitting. They're just here to ambush everybody.
Actually,
So
okay, let me just clarify. I want to see whether if the 1210 is the retest of the 1110, or it's just a matter of, you see that there are some two breakouts. I want to see whether that 1210 is the breakout of the 1110, or I should forget completely the 1110 that it broke and consider this new trade and see it's 1210 break, and then there should be another retest.
I see what you mean. Yeah. So the retest, you know what's really happening? Yeah, you're getting the precision here. The sellers are here, but it's so close to the level. You're just looking at this as an area. You want it to basically go through the area and bounce off the area. If you had entered this trade, the stop should be below the area, probably down here, below the breakout candle, down here. And then you're just surviving all this stuff. Right now, it doesn't look too good, but you're just surviving it. It comes and stops you. Okay, no big deal. But if it really makes a new high, okay, you're in this. So again, even though the candlesticks are giving you the precision, more precision than you get with just the blind levels, you still got to look at them as general areas still. So I would be careful. I'd be safe. I just put the stop down here. So you size accordingly. If you cut the breakout here, you're sizing your positions down here, stops here, and you size accordingly. And then if you're getting a new high, that's perhaps where you might be able to tighten up your stop and add into that position, and then you go for the run. That could be it. This is messy. This is really hard right now. It was looking good when I was looking at the breakout, but this is, sellers are there. What's also but positive is that it's holding above the level, almost precisely. It's pretty cool. It's holding above, but it's not holding above that seller, right? And there's new sellers overhead. So this is all kind of messy. Difficult price action right now. Very difficult to read. Best thing to do, if you're into this, put your stop and leave it alone. Add in later. Forget about it right now. Right now, it's going to mess with your head if you look at it too closely. So take it easy with this. Cool. Yeah, Juan, go ahead.
Thank you, Avi. Avi, a reversal is a change of the direction of the trend. Is the retest the same as the pullback, or are any difference between?
A retest, is basically a pullback.
Pullback.
And pullback to a specific area, the breakout area, not just a blind pullback, And yeah, reversals goes in one direction, then it turns around and it starts to trend in the opposite direction. That's a big reversal.
Thank you.
Cool. All right, who else wants to talk about what? Candlesticks. Oh man, candlesticks.
Okay, so how you determine like the 30-minute candles? Like, so once you are there, like, so can you what do you look into those candles exactly?
Yeah, 30 minutes. Those are that's where everything happens. Actually, hold on real quick on the CMD one. See that positive candle? New 1 minute high. You could consider this a retest. I've done this many times. Where the breakout retest here. This is the bullish candle. The new 1 minute high with the entry. Stop right below, and off you go. New high coming up. Is it going? This is looking good for the break. So, anyways, that's a setup. It's not ideal, but it's there. All right, 30 minutes. Oh, there it is. There it is. Breakout. Off you go. Look at that. See, waiting for that new 1 minute high. You guys get so much conviction. And I can run this thing up. Now watch. It's been choppy here. If it really goes, it's going to be clean up there. All right, 30 minute. So 30 minute, again, the most important thing to look for is, the most important thing that I look for is when not to trade. And right here, AMD is choppy. I'm not going to trade inside here. Simple as that. Most important thing. All right, then you're looking for where to trade. And so let's look at a few different opportunities today. SPY again. Very simple. It's choppy, so wait for the breakout. Caught the breakout today, and look at that. It was a good move. What else we had? I think we had Apple today. Again, choppy, so don't touch it in between. It did the breakout in the pre-market, so couldn't catch it, and off it goes. And here on 30 minute, look at that. It's just an ABCD pattern, right? Consolidating below the level, can catch that breakout, and then off it goes. We have, looks like NVIDIA as well. It's moving right now. So right here, you see these every day. You have this big consolidation. You don't want to touch it. And maybe you may have tried to catch an entry for a breakout earlier. It just got choppy. Maybe stop out once or twice, but leave it alone. Maybe you survive it. Let's go into the 1 minute, see what happens. So down here, here was the breakout area. You may have tried to enter, maybe stop out. You can call this a retest area. You may have entered, scalped it maybe. Tried it again perhaps and got a scalp maybe. Here's one, you'd still be in this. Maybe now it's ready to go. It's made new highs. So you have all these sorts of things. You may have stopped out 3 times on this before you get it to work. I don't see an entry here. I see entries in this area. So anyways, you're looking for structure on a 30-minute. And what's really easy, I'm just showing you guys the easiest thing, is basically you'll see it every single day. The pre-market's a great big mess, and the 8 a.m. candle defines it. So wait for it to get out of there. Wait for it to break out, catch that trend, and off you go. We have that every day. I feel like I've traded that every day so far in the last 3 months. I've hardly taken reversals or any continuation kind of plays. It's all just been breakouts. And those are simple. You don't need a whole lot. You really don't need. On Apple, we'd call this a continuation. You have this consolidation, breakout, consolidation, second leg up. So you're getting that today on Apple. That would have been a good one. I'm not sure where to enter though. Yeah, the pattern was broken, so difficult to enter. But yeah, so that's what I'm looking for. Looking for these patterns on a 30-minute. Now the thing is, there's no difference between time frames. As in whatever pattern you may be interested in, they're the same on every candlestick time frame: 60-minute, 15-minute, 30-minute, 1-minute, 5-minute, whatever. Whatever pattern you like, it's always the same on every time frame. It's just you get gaps overnight. So if you're looking at 60-minute charts or 30-minute charts, sometimes you have to deal with a gap, which makes it a little tricky. But other than that, no big deal. I think the easiest thing to look for is just look for these consolidations and breakout. Today we've caught Apple, Nvidia, maybe Nvidia, Tesla, SPY, maybe AMD starting to go soon. Apple as well. Yeah, we don't talk about Apple. So those are the easy ones. And just go with the low-hanging fruit, right? Easy. You don't have to make it difficult. Really don't make it difficult. Yeah. Tesla's doing all kinds of stuff today. Let's put the AM lines back on it. There it is. So we have, so Tesla, breakout, again, consolidation, breakout. Now up here, I wouldn't enter because there's no consolidation before the breakout. There's 2 breakouts, basically, down here and then here. Here, I wouldn't enter. That's it. So you're getting plenty of opportunity. So that's that. Cool. Anyone else? Anything else on your minds? The more you guys make me look at these charts, the more likely I am to get into a position. So I should stop looking at these charts. It's going to get tempting. Everyone good? Everyone know what they're doing? Candlesticks and all that?
Not really.
The Fibonacci levels work really good when I trade for 2 legs only, not more than 2.
There you go. Good. You have that criteria then to keep you out of over trading or getting into bad extended positions. That's cool. 2 legs only. I like that. I used to think like that too. I use it as candlesticks on 30 minutes. So same thing. You always get 1, maybe 2 legs. Good stuff. That's the thing, guys. Just observe your own trading. That's why screenshot everything, and then you can go back and observe it and see that, well, okay, if that happens again, you don't do it. So that's the way I've done it over the years. Yeah. Tesla would have got to go 1 leg here, and then the second leg. Don't plan for the third. Oh my gosh, the SPY is really $1 million trade. I don't know how to get into it. I'm gonna try and look at this. Entry was here about 250 added in, scaled out, all that stuff. Shit. So imagine this, huh? We entered about 250. The thing is sitting at 850 now. What is the return on investment of that? 300%, 500%. That's the thing about options. You gotta find ways to hold these things. You really gotta find ways to do it. It's very complicated. I don't know how to do it.
Take a look at Amazon.
Oh shit, you're gonna tempt me to Amazon now? What is going on here? Yeah, this thing's a paper. Oh wow. Look at that. This is great. You can see the consolidation, the breakout, and this breakout happened without a consolidation, but it's a good retest. You can call this a consolidation if you like. Hard to catch, hard to trade, but man. Boom. On a 30-minute, on a 1 minute. Wow, look at that. Breakout, retest. You catch the retest in this area, and you're just in this thing all day. It's amazing. Here's a good one. See this consolidation for the breakout? came back to the breakout area, didn't complete a retest, but it retested down here, halfway. Remember, the retest should be within, not beyond halfway of that range. And sure enough, this came and did that. Even gave it on a 1 minute downtrend with a very good double bottom. You can call that a retest. Find an entry there someplace. You can enter here even. Wow, I mean, these are all valid entries. Oh, shit. It's pretty good on a 1 minute. Wow. Oh, man, this is great. Must be news on this. Catalyst to make it trade well today. Tariff news or something. Cool. What do we got here? Lou, how do you place Fibonacci levels every morning at 80 100% line? Newbie, Lou. All right, the new way to do Fibonacci levels is the hotkeys. Ziad created some hotkeys for us. Please check out last Thursday's live trading session and the last, 15-20 minutes of it. We went through those hotkeys. Ziad was sharing with us how to create the hotkey, then you just hit a button on your keyboard and it's on your chart. You don't have to do anything. Easiest way you can do it. I recommend check that out. I still have to go and do that. That would be easy. Other than that, I'm using this Fibonacci tool. I've repurposed it, but you don't have to do all that. I think those hotkeys will make it easier. But the whole concept is measure the 8 a.m. candle and then draw lines at the same distance up and down on the chart. Nothing more to it.
Sorry, Avi. Where's the script for the Fibonacci levels?
Ziad, you in here? You got the script?
Yeah, Abby. Yeah, we posted it on the question and answer. If you wish, I can repost it. But it's there already.
Okay, I see. Thank you.
You got it. There are two scripts, one to add and one to delete.
Love it.
Great.
Oh, SK, cool. Yeah, you got a script for TOS as well for Thinkorswim. So thanks, SK. Yeah, you might want to post that in the question and answers if anyone wants it. That's all there. Shit, Apple hit another level, huh? Everything bullish. That's the end of the bear market. Which kind of sucks because we're going to have low volatility in a bull market, if it is a bull market, which means smaller moves. Bear markets are great because it's so aggressive. Anyways, we'll see. Cool. All right. Anyone else? Any questions? Shall we stop the recording here? It's going to get way too long for people to watch it later. It's been an hour and a half, I think.
You're putting it on trading terminal?
Yeah, I think I'll put it in trading terminal in module 9, which I'm putting more videos in there, all these kinds of sessions. So let's see if this is rendered and ready tonight. Otherwise, tomorrow. Here we go. Stop the recording. Cool. Stop the recording here.